This is our Forex blog for November 18th, 2011. And like we do most days, we really want to buy the strongest currencies versus the weakest. Your odds go up when the real-time strength, such as the yen, is showing incredible strength coming up around midnight here. And the daily, weekly, and monthly trend underneath it is also the strongest of all the currencies. When this currency is strong, and it's the strongest longer term, and it's the strongest real time, that trend tends to continue. And as you can see, this 1 hour of trend strength, for the most part, stays strong until about 3:30. Even if you miss the first hour of the move, when you see a pattern like this with extreme strength followed by very little weakness, half the weakness that there is strength, when the longer term trend is up, that trend is likely to continue. So as you click on the chart right here, 115, 120, 125, 130, we are anticipating. You never know whether it's going to be a 15-minute pullback, 30-minute, or even an hour and a half pullback. But that strength's likely to continue, and it does for about an hour. Then you have a little bit of intense weakness here. The strength comes back in for another hour. And at this point, the uptrend's over. You can see extreme weakness followed by very little strength. Typically, when the markets move too far, you might get 1 to 3 hour pullback, and then you want to look for patterns of the strength coming back. But starting around midnight right here, it's pretty clear that the yen is strong. Let's scroll back here. You can see the Australian is the weakest, or one of the weakest. The New Zealand is as well. And so the Australian yen, or New Zealand yen were two excellent ones to be selling coming up to around midnight. And guess what? You probably, even if you're actually just trading the chart, would have been looking to sell this even earlier. This one the trend was down. Here's the hourly moving average. This is one of many filters we use to help us identify and focus on most likely trend direction. Narrow range pattern right here. Breakouts of that typically work if the breakout is in the direction of what the filter says. Underneath the hourly, you prefer to sell a breakdown. This one broke out to the upside, and you can see it went up above the hourly, pulled back. And typically when currencies break out from above or below to above the hourly, it's going to continue up. Keep in mind this weekly, monthly trend is down. The daily trend is down at that time. And as it starts to go back up, you can see that there's just no strength. Very aggressive traders would have looked to sell this once it broke back down underneath the hourly. And you can see it just fell about 40 pips straight down. Now, coming up to midnight, if you were watching this, there really wasn't any kind of entry into this until this little pullback right here. There's two methods that we get into trades: pullbacks and sideways consolidations. A pullback is when the market's trending down, you get a nice little counter trend move up, preferably to a resistance area, in this case a monthly pivot level. You have the hourly moving average just 5 pips above us. Pretty safe place to go short right here at 30, and you can see it broke the previous day's low and it just kind of went sideways with very little weakness. That's why you use the real-time tools. Some of your trades you get into will be nice 20 to 50 and sometimes 100, 150 pip moves. And other moves are only going to be 5 to 15 pips. You got to recognize it and use our tools. If the market's falling without that much weakness, you get the hell out. Take your 5 or 10 pips and be happy. Let's look at the Australian yen. It's had a very similar pattern. It also had very low volatility. Came up to the hourly moving average, but failed to get back above it. I'm not sure I would have sold right here, but given this extreme strength. But when it came down and kind of went sideways like this, this is a pretty decent place to sell right here, 77.05, and it came down to the previous day's low and kind of, stopped you out right here. You had about a 25 pip win. One of the nice patterns, the narrow range patterns work, and when they don't work, they work the opposite direction. Anytime you have a narrow range pattern and it breaks out, it tends to lead to big trends, and when it doesn't, when it hits resistance, it tends to act as resistance or support here too. So when it breaks underneath there, it's likely to go down. Keep in mind the narrow range pattern that we have set up on here shows the previous 4 hour bars high and low. And so any trader who is looking at 4 hour bars sees this as the previous 4 hour bars high, and it tends to be support. Once it breaks down right here, traders that were long trying to buy the bottom fishers, are likely to have their stops get hit, and that's what caused this nice move down. Now, the pound also was strong. The daily, weekly, monthly trends up. Wasn't quite as strong as the dollar or the yen as far as longer term patterns go. but you certainly could trade the pound versus the weak Australian or New Zealand. Let's show this real quick. Oops. Notice the Australian was weak only until about 4, then it became strong. So, basically you were looking to buy the Australian dollar starting last night, probably around 11. It went up about 70 pips. Some of the entries you could have had in this trade was this little pullback here, this little pullback here. And let's put on the FX Trend Pro on this chart. If the market is not showing, continued strength or weakness. Oops, sorry, wrong one. This is actually one of our trend reversal signals. Major trend reversal sell signal right here. Typically, markets reverse within 5 hours of seeing these, usually about 50 pips. So you can see that the momentum was to the upside. A lot of momentum up. The pullback had no weakness. 1 5-minute bar of strength and then mild momentum up, no weakness. A lot of strength, which would have had you buy this pullback right here. But notice as it came back up to the high, it had less strength than normal and a huge counter trend sell signal. Pretty much the main reason why the market reversed later in the day. You don't get these every day. Usually they happen once or twice per week per currency. But when you do see them, look for signs of the momentum that's changing and then trade in the opposite direction. You can see a very clear reversal pattern here. As long as you have weakness followed by little strength, weakness followed by little strength, weakness followed by a little bit more strength here, weakness, little strength, strength, little weakness. This is a clear reversal pattern. You'll get these all the time. Here you have 2 hours of weakness. The euro is strong, very little weakness on the pullback. That strength momentum move is likely to continue here at 7:30, and it does. The weakest one at 7:30 happened to be the dollar. You can see the dollar was weaker than the yen earlier. It had less strength during this time, less amount of time. Coming up to 7:30 here is very likely to find a trade up in the euro dollar. Here's 7:30. Notice this trend. You had actual patterns on the chart itself much earlier than that. Extreme, nice 45, 50 pip move up right to a resistance area. Extreme strength followed by pullback with very little weakness. Typically, I draw trend lines underneath the bar. You don't necessarily have to draw it. You can always visualize where that would be. As soon as it breaks that trend line, you go long. I tend to put my stop a few pips underneath the bar low. If anytime you see extreme move up like this followed by a pullback, it's pretty safe to add 3 or 4 pips underneath the low. You always also want to use normal resistance areas or support. 62% retracements right here, so if you want to let noise not knock you out of this trade, you put it a pip or 2 underneath there just to be safe. You can see it went your way a little bit. There wasn't that much momentum, so at this point I'm a little concerned. If it pulls back and doesn't stop me out, as it starts going up, I'm moving my stop up to break even. As this thing starts going up, here is the Fibonacci profit target level. I always like to exit half the trade here, and then I would have got stopped out with a trailing stop here. My average exit would have been 69. I'm in this trade around 20. That's a huge profit right there. One of the downsides of buying it after 7 is it's already above our upper containment band. Most of the time, this is when the markets kind of run out of steam and reverse. If you did buy this pullback right here, you never want to let a trend line get broken just by sideways action. If a trend line gets broken by sideways action, you have to wait till it goes a pip above the bar's high right here at 85. So you're in this trade here. You realize that the market's up statistically too far. If you don't see a lot of momentum come in, you want to use a trailing stop to get out or any kind of resistance area right here. Myself, I tend to be very quick to get out. It came just within a few pips of this area and started coming back. I would have got out of this around 05. Obviously, didn't catch every pip. I left 9 pips on the table, but the risky trades when they're above the upper containment band, don't be greedy. In here around 86, probably out somewhere around 03, 04. Nice 15, 16, 17 pip profit. And if you're an aggressive counter trend trader during the U.S. session, when the market's up too much and it's risky to buy, look for some counter trend trades. You can pick up oftentimes 10 to 30 pip moves by, looking for divergence trades. That's where the market makes a higher high with less strength than it had before. It's up statistically too far. It's very likely to pull back, and use our trailing stop to get out of the whole thing. Don't, normally when we trade with a trend, I get out of half my trade when it hits resistance, and then I use the trailing stop for the other half. With this, just get out of the whole trade because you're fighting the trend. And one of the trades that works most days pretty well is when the market's up too much, draw your fibs on the first wave down. If it can come down to these fib targets later, this makes an excellent zone to buy. Let's see if the market came down to that zone. It did. You would have actually got into this trade here. It didn't actually pan out that much. You would have bought it here at 50. It went up, 30. It went up 20 pips. Notice how weak the weakness is here. And as it went up, it didn't have the strength. So this was, once you're in this trade, you're pretty clear that the market wasn't going to explode up like you had thought. But the Elliott two-wave pullback, when the market's up too much, you need to give it more room to pull back. Draw your fibs on the first wave down. Wait for the market to come to the first or second fib target. Draw your trend line. Wait for the price to break it. Again, you would have been in here somewhere around 32. As it went up, you can see there just wasn't any strength. So you would have had a small win on that, not a loss. But this also is an excellent place to, if you're looking for a deeper pullback in this counter trend trade, usually counter trend trades won't go beyond 2 waves. So this makes an excellent profit target for this sell up here too if you are a little bit longer term trader.